Will US non-farm payroll spark fireworks ahead of the 4th of July celebrations, or will the data throw cold water on investors' enthusiasm? Well, June's forecast suggests a softening labor market, a slowing jobs growth, a slight upturn in the unemployment rate, and steady wage gains. But the key question again here is, will the data surprise to the upside once again? Well, I will walk you through what the technical signals suggest, and currently I have my eyes on three important assets, gold, Bitcoin, and dollar Swiss franc. There are some interesting technical patterns in these graphs, so let's kick things off with gold first. And as we can see, gold has been on the rise so far this month since the end of June, and is currently capped around the 3,350 level, around its 20-day moving average. Well, if you look at the technical signals, there is some caution given the slight pullback in the RSI, which has just climbed above its 50 neutral mark. The stochastic oscillator is also rising and is approaching its 80 overbought level, but still it's not there, while the MACD has yet to climb above its red signal line, so there is still some caution. However, the rebound around this important support trend line coming from the end of 2024 is still keeping hopes for a bullish continuation alive. So we are waiting to see whether the 3,350 level will give way in order to test the next resistance around the 3,430 level, where this tentative resistance line from the all-time high of 3,499 is placed. So I would like to see a clear close above this territory to target higher levels near the 3,500 and 3,530 territory, where this resistance line from February 2025 is also placed. In this, well, if non-farm payrolls disappoint, probably gold could face another bullish cycle. Perhaps that would also increase the odds for a July rate cut, or could basically boost the rate cut expectations in the coming months. So that would be positive for gold. However, if the data miss expectations, basically if they come stronger than expected, we could see a pullback towards the 3,290 level, where this support line is placed. So that area would be tested again. If it fails to hold, we may see a downward move, sharp downward move towards the 3,200 psychological mark, and perhaps the 3,165 level, where this longer term ascending line from October 2024 is placed, could be the last opportunity for a rebound before we see a faster decline towards the 3,000 psychological mark. Now looking at dollar Swiss franc, well, this has been quite bearish over the past sessions. It faced a steep decline near the 20-day exponential moving average a couple of sessions ago. It's currently trading near more than a decade low of 0.7870. So that suggests that perhaps it's time for a rebound given this sharp decline and the continuous red candlesticks printed since the end of June. Nevertheless, and basically looking at the technical signals, we do have oversold signals coming from the RSI and the stochastic oscillator. Both of these indicators suggest that the latest decline is overstretched. However, I would like to point out here that in the 4-hour chart, it seems that the market has already created a pennant pattern at the bottom of this downfall and following a steep decline in the previous session. So that's a bearish pattern, actually signaling a continuation of the existing trend, so a continuation of this negative pattern. So perhaps this decline is not over yet, and we may see another extension probably towards the 0.7850 level, which was also a key barrier a decade ago, while lower than that, the 0.7710 number has been also a key barrier in previous years. So let's see if the price extends its decline. Probably we may see another pullback before we head higher again, before we see some recovery. Nevertheless, if the US data comes stronger than expected, the pair could violate this pennant pattern on the upside and move above the 0.7930 number, where this support trend line from July 2024 is placed. It's currently acting as resistance, so a clear close above it may take us higher to 0.8035 and closer to the constraining 20-day exponential moving average. Then for stronger bullish signals, I would like to see a clear close above 0.8125 and beyond the 50-day exponential moving average, which caped bullish actions during, back in May. That's around 0.8170. Therefore, an extension above these key barriers over here would push the price out of this bearish channel and therefore could signal more gains ahead, likely towards the 0.8290 territory. And finally, looking at Bitcoin, the king of cryptos staged a really nice rebound yesterday. Basically, it was a symbolic upturn, a break above this bearish channel over here, which suggests that perhaps upside pressures may strengthen in the coming sessions. The MACD supports this narrative. It's currently trading, it's currently moving above its yellow signal line. The RSI is also rising above its 50 neutral mark. So there is, so the technical signals are backing potential increases in the short term. However, we shouldn't forget that the stochastic oscillator is already in the overbought zone, so some caution is likely. However, I think that we do also have a bullish engulfing pattern here. So it was a clear break of this bearish channel, which could see an extension towards the 111,000 level, and then probably towards the 113,260 level. That's the area where this ascending line, which connects the highs from December 2024, is located. It's a strong resistance trend line, so a continuation above it could confirm additional gains towards the 115,000 level, and then probably up to the 117,000 mark. Again, here a negative surprise in US non-farm payrolls report could help Bitcoin against the US dollar to gain more ground. Otherwise, if the data comes stronger than expected, we could see a pullback back into this bear channel below the 108,240 level and towards the 20 and 50-day moving averages, which managed to support the market near the 106,170 number yesterday. Then if additional declines emerge here, we could see a test of the 23.6% Fibonacci retracement level of this up leg over here. That's around 103,200. Then below that, the pivot point could be somewhere between 96,800 and 97,700 level, where the 200-day moving average as well as the 38.2% Fibonacci mark are placed. So that's everything I wanted to share with you guys. I hope you liked my analysis. If you did, please subscribe in this channel for more technical updates. I wish you have a great trading session, a great NFP session, so keep a close eye on this data, and wish you have a great long weekend if you are in the US. So wish you good luck with everything and see you next time. Bye bye for now.